Hello everyone, welcome to ACC Taxation video lectures brought to you by AccountancyTube.com. We are going to start corporation tax in this video lecture. Now we have so far covered our income tax, capital gains tax and inheritance tax. And when we started our income tax, I told you that we will spend a lot of time studying income tax so that we can spend less time studying corporation tax. Most of the stuff which we have seen in our income tax in much detail, so we will just go through that areas in our corporation tax, which will be exactly the same in here as well. Say for example, trading profit and capital allowances, property income, so everything, interest income, everything will be exactly the same like we have seen in our income tax. So we do not need to go into the details of that, which we have already seen. So these lectures, the lectures of corporation tax, will be just small lectures, short lectures, because there isn't anything to go into the details of. Almost everything is exactly like we have already seen. So I'll just quickly go through the areas. I will quickly tell you how to calculate the corporation tax and how does it work anyway. So I'm using F6 lecture notes for this video lecture. However, this is relevant for both F6 and P6, this video lecture is. So if you're a P6 student, you will have to find the same stuff in your P6 notes after finishing this lecture. And I have just shared the screen anyway with you. So, alright, so corporation tax pro forma, first of all, as you can see on your video screen. Corporation tax, what is corporation tax anyway? So corporation tax is a tax which corporations pay. Corporation means companies. So companies pay tax on their profits, so that is called corporation tax. Right, so as you can see the pro forma on your screen, corporation tax format. So first of all, we'll take trading profits, and then we'll take interest income, property income and capital gains. We deduct qualifying charitable donations out of that. So if the companies make any donations, we will have to deduct that out of it, and whatever the remaining amount is, we will have to pay corporation tax at the rate of 19%. So for our current tax year, the rate is 19%, and total amount, it is known as total taxable profits or taxable total profit. So we'll have to pay tax at the rate of 19% on that. Now, excuse me. Now just beneath that, if you see, it says note 1, interest income. The companies receive interest gross. No grossing up is required, just the way we calculate for individuals. If companies pay interest on a loan other than for trade purposes. Now sometimes there are two types of interest which we pay. So we take in a loan and we are using that loan for trade purposes. Alright, so if we have taken a loan and we are using that loan for trade purposes, whatever interest we are paying on that will be deducted out of the trading profits. Alright, now sometimes we take a loan for non-trade purposes. Whatever interest we pay on that loan, the loan which we have taken for non-trade purposes, interest paid on that loan will be deducted out of the interest income. Alright, so the interest income which we have listed in the pro forma. Alright, so that's what it says. Remember, interest paid for loan taken for trade purposes is deducted from the trading profits. Just beneath that, note number 2, it says trading profits. Same trading profit adjustments as we have seen in our income tax, same capital allowances as we have seen earlier. The only difference is for the capital allowances that there won't be any private use with the private use of the cars. Alright, now as we have seen in our individuals cases, when we were calculating the capital allowances, now businesses of individual is different than companies. Now private use, when we were studying the private use, I told you that private use of the owner is a private use. Private use of the employee, excuse me, private use of the employee is not a private use. Or it's only the private use of the owner is a private use. When there is a private use of the employee, it is a business expense. Now in individual cases, the businesses which are not companies, so the people who are owners of the business are running the business as well at the same time. So they might be using things for their private use, say for example car. So that's why we took the private use of the owner in that case. However, if we talk about the companies, who are the owners of the companies? Shareholders are the owners of the companies, and shareholders are normally not involved in the running of the businesses, so there won't be any private use of the owners, private use of the shareholder. So that's why in the company's case we will not take any private use of the companies, private use of the so there won't be any private use of the car, because shareholders are the owners of the company, which are normally not involved in running of the business, so there won't be any private use in this case. And private use of the directors, private use of the employees is not a private use anyway. Alright, so private use means private use of the owner. In case of companies, companies are in the company's shareholders are not not normally involved in the businesses. All right. Right then, just beneath that is property income, as we have seen in our income tax, capital gains tax, as we have seen in our capital gains tax chapter, and just beneath that it says our accounting profits. Now, companies pay tax according to accounting profit, and for that we will have to see our next chapter, which is our accounting profit. Right, just beneath that, chapter number 22. You might be thinking it was so small chapter. Yes, indeed. The chapters in corporation tax are so small because everything is exactly the same as we have seen earlier, as I said as well. Right, so accounting profit. Now, there are three types of accounting profits in our corporation tax. One is a short period of accounts. So short period of account means less than 12 months. Normal period of account means normal 12 months, and the longer period of account means more than 12 months. All right, so there are three types of accounts. So whenever a company has started its business, or whenever they are making their accounts, they can make a longer period of account, which is more than 12 months. They can make a shorter period of account, which is less than 12 months, or a normal period of accounts, 12 months, normal 12 months. Now, when it is normal 12 months, it's not a problem at all. And when it is less than 12 months, not a problem. However, the accounting period for tax purposes cannot be more than 12 months. So whenever a company has made its account more than 12 months, say for example 16 months long, so if the company's accounting period was 16 months long, in that case we will have to divide that 16 months into two periods. So two accounting periods for the tax purposes. So one would be the first 12 months and other one would be the remainder months. All right, so that's how we do it. Right then, so as you can see on your screen, so it says if a period of account by a company is more than 12 months, then we'll have to split it into the first 12 months and the remainder months. As you can see in the just beneath that. So period of account is period for which the company prepared its accounts. So it can be more than 12 months. However, accounting period means according to which we pay the tax. So period according to which we taxable total profit is calculated, and it cannot be more than 12 months. Now, when it is shorter period of accounts, it's fine, and when it's normal period of accounts, it's still fine. However, when it is a longer period of accounts, say for example 18 months long, so we'll have to take first 12 months and the remaining 6 months. So this will be divided into two different accounting periods, and tax will be calculated into two different ways as well. All right. Now, just beneath that, when the accounting period is more than 12 months, then how can we divide the incomes? Some income might be falling in the first accounting period, other income might be falling in the second accounting period. So how to apportion that? So the information is just given to you below. So if it is a trading profit, it will be on the time basis. Capital allowances calculated separately for two accounting periods. So capital allowances will be separately calculated for two accounting periods. Interest income will be in which for the period in which it relates. Property income as well, and the capital gains will be in the period in which the asset was sold, and charitable donations when we have paid. So it will be deducted out of the period in which we have paid it. All right. So that's how we calculate. That's how we will put the incomes in the relevant accounting periods. Right. All right. Then, so that's end of these two chapters. Let's do a question now. If we move to question number 199 of your BPP exam kit, please. F6 exam kit. I'm talking about F6 exam kit. Question number 199 of F6 exam kit, please. Right. Now, as you can see on your screen as well, so just read this question. It says that RAT Limited started trading on 1st of December 2016 and prepared its first set of accounts to 31st of March 2018. Right, so started trading on 1st of December 2016. However, he made his accounts to 31st of March 2018, which means it's more than 12 months. Now he's asking that how will we make his account? All right, so there are different options given to us. So what would be the right answer? Could you please tell me? So the accounting period is more than 12 months. So we know that when it is more than 12 months, we will divide that into two portions, first 12 months and the remaining 3 months or 6 months. Right, so in this case, it's first 12 months to the 30th of November 2017 and the 4 months to 31st of March 2018. That is the right answer. Right? Right then, let me see if we have to do any other question as well. I just listed down the question on the notes. So we have done question 199. Yep. Yeah, that's it for this video lecture. I don't think there is anything else left in this video lecture. Right then, That's end of our this video lecture. I will see you in the next video lecture, and we will continue our corporation tax.